Hey, Richest you money maniacs, welcome back. In this video, I am very excited for a bunch of different personal reasons as well, and professional, to be able to share with you a Forbes article about the price of gold for 2021. Let's get right to it. Hey, Richest you money maniacs, welcome back. In this video, we're going to read this Forbes article that's making predictions or explanations of gold prices for the year 2021. This is really exciting stuff because it's coming from the mainstream media themselves. Now, keep in mind, I've done a lot of videos that talk about the price of silver and the price of gold and also IULs. If you're not familiar with them, I'm talking about laser funds, which is the indexed universal life insurance policies. Those are my three preferences right now. Now, usually I have a fourth, and that is real estate. But the real estate bubble is just about to continue. It's not just about to. Actually, it's already imploding on itself. It just hasn't reached some markets as much as it has commercial real estate. The private sector is going to be hit very soon too, because that's just simply how waves ripple out as they move from the center of a disaster and move out. It just takes time. So anyway, back on topic, let's get to this article by Forbes that talks about the price of gold for 2021. And here's why this is important, because the price of gold right now is completely undervalued. Everybody thinks it's at highs. But because the Federal Reserve, the central bank, which is a privately held central bank of the United States, has been printing money like it's going out of style. And I say printing, and I can't even use that word anymore. They're not printing currency anymore. It's not money, it's currency. They're not even printing it though. They're going to stop printing dollar bills. They've already stopped printing coins. All they do is type numbers into a computer. So they're typing numbers into a computer. They're typing currency into existence. That's what I'm going to say from now on. They're typing currency into existence at the Federal Reserve at such an alarming breakneck rate that hyperinflation is absolutely inevitable. See, one of the things you need to understand, and if you've watched Mike Maloney's The Hidden Secrets of Money, watch his video series, and what he explains in very easy, simple to understand terms is that basically the US officials, government, and this private bank, the central bank, the Federal Reserve, they've typed themselves into a corner. They have no choice but to continue typing currency into existence because of hyperinflation. Now remember something, the reason increasing inflation is important is because the United States government holds so much debt that it will never be able to pay it back. So the only way to survive that kind of debt is to make the currency you're using to label the debt, the dollar, basically worth nothing. Because if it's actually worth anything, you will never be able to pay that debt back. If I owed you $1 million, but $1 million only buys one piece of wood, I could go, okay, well, here's a piece of wood. Now I've paid the debt back. And you're looking at me going, well, no, I loaned you $1 million and you bought a couple cars, you bought a house, you bought some property, you bought a business. That's not the same as this piece of wood. And I turn around and say to you, yeah, but this piece of wood, because of inflation, now costs $1 million. And so there you go. Sorry. It didn't say, and if inflation goes up, the amount of money that I owe you goes up. No, it didn't say that in our contract. So here's your piece of wood. That's exactly what's occurring with the Federal Reserve and inflation. And that's why they want inflation to go up, because the Federal Reserve and the US government have basically bought roads and bought government programs and bought countries around the world to tell them how to run, and bought elections and bought regimes and bought dictatorships and bought basically a global empire using our tax money. They bought all those valuable things. And now the Pied Piper's coming back and saying, okay, you got to pay me back. And they're saying, oh, well, no, now all we got to give you is this one piece of wood, because everything we borrowed is just worth this piece of wood now. That's because the dollar is so valueless. That's the game they're playing with inflation. And not only is it dangerous, but it inevitably has to break, because you can only print a currency, you can only type a currency into existence up to a certain point. And then the market, not the people even, the market on its own will completely lose faith in that currency, which then of course means that it won't have any value at all. It doesn't matter how much they type, how many pieces of currency they type into existence. No one will take it for payment. And if no one will accept it for payment or use it for a transaction because it's worthless, guess what? Everything falls apart. Now, is that really that bad? Would it really be that bad for everything to fall apart? It would hurt for a while. And as big as it is, and since it's global, it probably would hurt for longer than usual. However, from every forest fire comes new growth. And guess what? Most human beings not only are resilient, but are extremely creative and will come up with solutions for the challenges that face the market. And those people will produce value that everyone else will appreciate. So let's get into this article real quick. I want to read it to you and make brief comments on it, and then kind of see if you have anything to say in the comments below. So here we go. Forbes wrote, "Could 2021 be the year of gold?" And this was actually on October 26th, 2020. This was very recent, so that's really nice. It's exciting to see this. A new year, thankfully, quickly approaches, which means an avalanche of market predictions is soon to cascade across Wall Street. So let's jump the line and get ahead of the crowd. 2021 could well be the year of gold. That's an extremely important statement, because the mainstream media has never been a fan of gold. This signals a huge swell and change in attitude towards precious metals. Let's continue. Not that 2020 hasn't already been a solid year for the anti-dollar. Gold trends at a recent $1,910 per ounce is up 25% for the year, and there's still the potential for an election disaster or a non-peaceful transfer of power that could propel the metal even higher on the fear trade. Now, there it is again. The mass media selling fear. Why? Because fear motivates people to look to someone who knows what they're talking about. So when you see the mass media talking about fear, they're just hoping that you'll buy into them. All right, but the part that really got my attention was the 25% performance. Remember how you're supposed to settle for stocks performing over the long haul for 4%? No thanks. I think I'll take the 25% with gold. How about that? All right, let's continue further. But let's assume that's not the case and gold has a fairly uneventful final 2 months of the year. That brings forth 2021 and either a new administration in the White House or the same administration. And either administration will very likely mean higher gold prices as the approaching year unfolds. It's a really great way to represent it. They almost sound like they're not biased. And that's wonderful to finally hear somebody talking without a slant. It's absolutely vital that all you do is really look at the money and not pay attention to all the other distractions, right? So it's nice to hear that actually it doesn't matter who stays in office, gold's gonna go up. That's important. Keep that in mind as we read the rest. Both presidential candidates have been making economic promises that are conducive to gold price strength. As those promises are fulfilled, and they likely will be in some fashion, gold will very likely surpass the record high of $2,067 it set in August. On one side of that ticket, Mr. Trump is promising the biggest tax cut ever that theoretically would benefit middle-class taxpayers who lost out in his previous tax cut. On the other side, Mr. Biden is promising a substantial stimulus package and certain economic policies. A $10,000 minimum student loan forgiveness to help the vast swath of Americans who are out of work and struggling to stay afloat financially. Now see, that's a really a really good example of a couple different ways of thinking, a couple different ways that these two administrations would act or would respond. And yet the final result still always comes down to gold being more valuable. One last comment on that last paragraph about Joe Biden trying to help all these folks who are out of work. Why are they out of work? Because the government shut everything down. I'm done. Let's move on. Either one of those platforms would cost trillions of dollars. And alas, Treasury hasn't a single one of those dollars in its wallet to cover the expense. Boy, isn't that the truth? So, as is normal in America, Uncle Sam will go with hat in hand to the bond market and beg for another lifeline from investors. Who are the investors? The central banks. Investors, such a good word. It recognizes the central banking system as a private entity. Oh yeah, there are some investors that actually put money into the bond market. Well, there used to be until they went to 0% interest. Insanity. No investor is investing in U.S. bonds and treasury bills right now because they don't make any money off of it. Even if you're just a loyal citizen, you're not going to put your money in a treasury bill or treasury bond, or you're just not going to do it. Really, who they're talking about is the Federal Reserve. That's it. In fact, that by definition is the Federal Reserve's role. They are the lender of last resort, quote unquote. Well, if you make it so that no one wants to invest in the United States, no wonder we have to use them. Way to go, guys. The dirty little secret, of course, is that Uncle Sam is effectively bankrupt and investors aren't likely to ever recoup a meaningful real return on the money they invest in the U.S. debt. Holy cow! I am really shocked that Forbes is actually writing this in mainstream media. Good on them for once. Debt in America exceeds $27 trillion now, or 137% of the economy. As troubling as that number is, it radically undercounts the true depth of America's debt-fueled woes. That's because our currency is based on debt. Hello? Obligations for which the U.S. is already on the hook, entitlement programs, federal employee and veteran benefits, etc., means the country really owes more than $155 trillion, or nearly 800% of GDP. My God, if you are a U.S. citizen and you do not get sick to your stomach at that number, there is nothing that will shake you. Certainly, Congress will find a way to sharply reduce those obligations at some point in the future to the detriment of the beneficiaries. Yeah, the beneficiaries, well, the Federal Reserve, who's going out and buying things all around the world. And oh yeah, if there are any investors dumb enough to buy treasury bills or bonds, sorry, we can't pay you back. In the meantime, however, Uncle Sam will rely on his buddies inside Treasury to do his bidding by keeping interest rates near zero while stoking the inflation by printing oodles of dollars. And we know why now. So that they can at least manage the debt. They'll never pay it back, but at least manage it until it implodes on itself. There really is no other way. America's already large economy can't expand fast enough to pay down the debt, particularly when the U.S. must issue more and more debt just to keep the lights on and to pay interest on existing debt. That's important. They're only paying interest, not principal. Just interest, which means it keeps getting bigger. And an outright default of some debt, while certainly not impossible, seems unlikely, given America's need to maintain the full faith and credit pledge backing its bonds. The only viable solution is to let the dollar drift lower, or for the government to reprice gold relative to the dollar as FDR did in 1933. Maybe that happens at some point in the future, maybe it doesn't. But an ever-weakening greenback seems baked into the cake at this point. Yes, the buck will have its moment of strength and vigor, but the coming year looks like another strong one for gold nonetheless. As the dollar loses, gold wins. Very likely, gold tests the $2,500 level in 2021, a 30% gain from current levels. The metal could even test $2,700 depending on the global market's reaction to the declining dollar. Physical gold is always the best way to play this. If only to protect yourself in the event of a monetary crisis. Wow. Bad editing, Forbes. If, however, you want to find a more convenient form of gold for an investment account or a retirement account, take a look at the Aberdeen Standard Physical Gold Shares ETF or Sprout. Don't go near ETFs, whatever you do, because an ETF is an IOU for gold. Here, I'm going to give you an IOU for this ounce of gold that you just paid me for. You paid me $1,900. I've got your $1,900. Here's a slip of paper that says I have an ounce of gold with your name on it. Now I turn around to your neighbor and I say, hey, you want an ounce of gold? And they say, yeah, I'd like an ounce of gold. I'll give it to you for $1,800. Okay, I'll take it. I take the $1,800 from that person and give them another piece of paper for the same ounce of gold. And I do that 10, 20, 30, 50, 100, 200, 300,000 times. That's exactly what's happening in the ETF market, and that is actually one of the newest bubbles. And actually, by definition, ETFs are a Ponzi scheme. Look that up in the dictionary. So here you have it. Forbes, one of the mainstream media, most respectable, credible articles, magazines, news outlet, whatever you want to call them, saying that what you really need to get is physical gold. And oh, by the way, you could get an ETF too if you want to, but you probably should get physical gold. Get the gold, right? But what's really stunning is how they've called out exactly what we've been talking about on this channel and all these different videos we've done on gold and on silver. And also Mike Maloney's been talking about. Oh, and by the way, Robert Kiyosaki's been talking about. Oh, and by the way, several other really smart people, George Gammon, even Doug Andrew. I mean, you got to watch these fellas. They know what they're talking about. It's really bad when the mainstream media is starting to warn people that you need to protect yourself. Doesn't matter who gets elected. That's a really important point, especially since the election's right around the corner. You don't care who gets elected. You have to watch the money. You have to learn about money. You have to master your finances and you have to learn more. That's why we give this information to hopefully help you become better with your finances and understand when you read these types of articles what it means. Now, I would strongly encourage you to go to goldsilver.com and buy some physical gold, but even better, I would strongly encourage you to also do some research into buying physical silver, and here's why. Because gold is $1,900 per ounce, so silver actually is only $26 to $30 something dollars per ounce, depending on where you get it and what quality of or coin that you get. So it's much less expensive to be able to buy a precious metal like silver and then be able to survive when the hyperinflation kicks in and the dollar has no value and it completely implodes on itself. Then you still have the silver and you have more of it, because really, remember, when you're protecting your value, you're talking about a volume game, right? Sort of like with stocks. You don't want to just hold one really expensive stock. You want to hold a bunch of stocks that all go up, even just a little bit, because that's worth more than one really expensive stock that only goes up a little bit. But that's a whole nother video. I can explain that another time. But silver is at an incredibly undervalued position right now, and you can tell by the gold-silver ratio. Another really great reason to seriously consider silver is because they won't confiscate, and I mean the government, won't confiscate silver. They have confiscated gold in the past, and you can watch my video when I talk about that and explain it in more detail. But just know that, and even Forbes in this article mentions that they did it in the past. Will they do it again? We don't know. But they could get that desperate, and they've done it before. So do you really want to hold something that they might steal from you for too long? I don't know. That's not for me to say. It's for you to decide. However, if you're just learning to master your finances and you're struggling to make enough real money and you're dealing with trying to understand how these currencies all work, then it might be good to invest in silver much more affordably and protect yourself and your family immediately. All right, so I hope that you found this information helpful. I hope you found this article as amusing and also as educational as I did. So if you haven't already, please give the video a thumbs up if you liked it. And also, if you haven't already subscribed to the channel, please do. We would love to be able to have you come back every time we put up a new video. Even better, if you have questions, comments, or observations about this particular video, definitely write them in the comments below. We'd love to hear from you. All right, everybody, all my wonderful money maniacs, we'll see you next time.